Time for All Things Money with David Blain, a discussion about your money, including everything from investing and taxes to real estate. Now with this week's program from D.L. Blain Company in New Bern, here's David Blain.
Hello and welcome to All Things Money. My name is David Blain, and for the next 30 minutes we're going to explore some financial topics with you. For those of you maybe tuning in for the first time, let me just explain a little bit. All Things Money with David Blain is a weekly half-hour show that airs on cable TV 10 in New Bern, as well as 94.1 FM on the radio dial. Our show times, in case you can't watch the whole show or listen to the whole show today, we're air at various times throughout the week. On cable TV 10, we air at 9 a.m. and 6:30 p.m. on Wednesdays, Thursdays at 9 a.m. and 6 o'clock p.m., and Saturday at 12 o'clock p.m. So there's 5 opportunities to watch us on cable TV 10. 94.1 FM WNBU, we air Thursdays at 6:30 p.m. and Fridays at 12:30 p.m. So there's 7 opportunities to catch the show if you can't watch the whole thing today. We also encourage you to visit our website, which is www.dlblain.com. That's dlblain.com. And there you'll find archived copies of previous shows you can download and listen to at your leisure. If you have any questions or comments, our phone number is 252-633-0107. And our email is allthingsmoney@dlblain.com. That's dlblain.com. And as I mentioned, we're a weekly show that focuses on economic and financial topics such as fiscal, monetary policy, geopolitical issues, investing, taxes, insurance, estate planning, family businesses, real estate. We try to cover anything that relates to financial topics that may be of interest to our listeners in Craven, Carteret, and Pamlico counties. So with that introduction out of the way, if you have any questions or topics you'd like to hear on the show, contact us at our email or phone number. Today we're going to follow up on a couple of topics that we've been hitting on recently. We're going to talk a little bit about exchange-traded funds, or ETFs, which are certainly taking the investment world by storm, and for good reason. They're wonderful vehicles. We're going to talk a little bit about the MLP indexes, the Master Limited Partnership indexes, and what's a Master Limited Partnership, how they can benefit you and why you may want to take a look at them. And then lastly today, we're going to revisit some of the information on the Fed. If you recall, on a prior show last month, we started talking about the Fed and the important meeting they had coming up and what their role is. Well, today, I'm going to tell you, talk a little bit about their role in the economy and how we feel that they could benefit or leave the economy alone. But we're going to start off with exchange-traded funds. We had a whole show on this, what they are, why they're beneficial for the individual investor, and I thought today I would share a little bit with you about some of the other things that are being said about ETFs. This was from CNBC.com, which, if you're a long-time listener or viewer of the show, you know that I encourage you to turn that stuff off and don't focus too much on CNBC, but this was actually a decent article that they had. And the gist of the article was they were talking about how that the active managers in the investment world, whether they be active managers of mutual funds or separate accounts, have really been having a very rough time recently, and how ETFs are a wonderful option and really the vehicle of choice for investing. Now, when we're talking about investing, the traditional asset classes of stocks and bonds and cash, real estate, commodities, these are things that you invest in. The vehicle that you choose is another thing altogether. The basic vehicles are you can use individual stocks and bonds, basically meaning you buy a share of Coke or Pepsi or IBM, or you buy a GE bond or a U.S. Treasury bond. You can invest through mutual funds, which there's a manager that that purchases these type of securities and puts them into a fund which you can then purchase. An exchange traded fund is sort of a hybrid between individual securities and a mutual fund. And we think that for some of the reasons we'll talk about, it is definitely the wave of the future. In fact, over the past several years, most active managers have not been able to earn their fee above and beyond the index that they're able to track. The active funds, the sort of a perfect storm of the market volatility and the increasing correlations of the market has not boded well for the active managers. And why is this? Essentially, the global macro market is currently dictating the majority of things that are happening with individual stocks and bonds. And so the influence of any one particular company to buck these global trends has been very difficult to do, and so there's not a lot of value to be added by trying to select individual companies. The high-frequency trading, which you may or may not have heard about, is another thing that's been impacting the ability of active managers. The hedge funds and individual traders that are in the markets and are trading, large volumes of securities in fractions of seconds, well, they help to reduce some of the inefficiencies in the market. The macro-driven tendencies are also increasing the correlations. We see here that the average correlation in the major stock indexes is now above 80. What that means that for the movement in one stock and another, that on average 80% of the movement of all the stocks on the market are going in the same direction. That it's very difficult to buck the trends. Historically, it's its highest level since the crash of 1987, and it's well above its long-term average of 45%. That means that normally less than half of the movement of the overall market can you dictate an individual company. That means that a lot of individual companies are going their own way, both up as well as down. When you have high correlation like we have today at the 80% level, it means that the majority of companies are moving in the same direction. Currently, that happens to be up. In 2008, it happened to be down. But in markets like that, it's very difficult for the active managers picking individual companies to buck that trend. Well, we'll continue with a little bit of an update on the exchange-traded funds, but right now we're going to take a quick message from some of our sponsors, and we'll be right back. For All Things Money, this is David Blain.